discuss one very interesting topic, accounts of company. As I always say, students, the last three chapters according to me are very important for exam because most of the times questions are from those units only, and you can expect one or two questions from these three units. Case-based question, theory, MCQ, case-based MCQ, anything can be asked. Now, in accounts of companies, we are going to discuss what are books of accounts, how are they to be maintained, for how many years are they to be maintained, can we order reopening of the books, what is NFRA, what are the other documents that the company needs to maintain. So everything related to accounts, books, other papers, documents is covered under this chapter. So accounts of company, I have a small table for you. It covers most of the basic concepts. What does a company need to maintain? Company shall prepare books of accounts. Books of accounts will include books and records maintained for the goods sold, goods purchased, cash received, cash paid, records of asset, liability. These are the books that the company will maintain. Company will also maintain other books, papers, documents, vouchers, other supporting documents. Financial statements. Yes, the company shall maintain financial statement. Now that we are on the topic, let us understand what is included in financial statement. Now, financial statement is discussed under section 2, clause 40. This is important from the definition point of view. Sometimes a 2-mark question is asked, define financial statement. So financial statement will include profit and loss account or income and expenditure account, as the case may be, depending on the type of company, whether it is profitable or non-profit organization. It includes balance sheet, cash flow statement, statement of changes in equity, any explanatory note. But if you are a one-person company, small company, dormant company, private company, which is a startup, then it may not include cash flow statement. So that is one small privilege given to small company and one-person company, dormant company. Otherwise, the financial statements of all other companies will include profit and loss, income and expenditure, balance sheet, cash flow statement, notes to accounts, and statement of changes in equity. Why is cash flow exempt? Because it's a very tedious task to prepare the cash flow statement, and sometimes they don't have so many transactions. Okay, these dormant companies and small companies may not have many transactions. So yes, there is a small exemption to them. Maintenance of books of accounts, they will be kept at the registered office of the company. So books shall be prepared, they shall be kept at the registered office of the company, or the board of directors may keep it at any other place that they decide. It's only thing that you should inform the ROC within 7 days that this is the place where we have kept the books of accounts. So you can keep it at any other place in India that the board of directors may decide. Within 7 days, just inform the ROC. What is the time period for which you should preserve the books? The book should be preserved for a period of 8 years. But what if my business is only 4 years old? Then in that case, you need to preserve the books for all the 4 years. Inspection. Who can inspect these books, documents, other papers? The books, documents, etc. can be inspected by the directors. They are open for inspection by directors only. However, certain other persons like registrar of companies, authorized officer of the central government, or officers of SFIO, that is Special Fraud Investigation Office, they can also inspect. Now, under what circumstances will they inspect? See, maybe they are suspicious or they have received some kind of intimation from the other person that these accounts need to be inspected. Yes, in that case, if they are doubtful as to the credibility of the account, then they may inspect. So registrar can inspect, authorized officer of the central government or officer of SFIO. In case of failure to comply with these provisions, you will be subject to penalty of 50,000 to 5 lakhs. So students, here we have also covered all the penalties so that it is easy for you to remember them. Reopening of books of accounts on courts or tribunals order. Sometimes when we feel that the transactions are fraudulent, see, I have mentioned it over here. Why will you ask for reopening of the books? See, under normal circumstances, once the books are closed, they are approved by the board, then they are also approved by the shareholders in the general meeting. Then after that, you will not make any changes to the books of accounts or the financial statements. But if there is, if we feel that the accounts are prepared in a fraudulent manner, so this is the keyword. If you feel that the accounts are prepared in a fraudulent manner And if you feel that the affairs of the company are mismanaged, thus casting a doubt on the credibility of the financial statements, you cannot rely on the financial statements, then in that case, you may ask the company to reopen the books, recast the books. The court or tribunal may pass an order in case an application is made to it either by the central government, income tax authority, SEBI, any other statutory regulatory authority, or any other person. So if they request, then yes, we may reopen the books. They will apply to the court or the tribunal, and the tribunal will ask the company to reopen, recast the book to make the corrections. What are the reasons we have mentioned over here? The court or the tribunal will pass an order if they feel that the accounts were prepared in a fraudulent manner, affairs were mismanaged, thus casting a doubt on the financial statements. Notice will be served to the applicants. Applicants in this case are the central government, income tax authority, SEBI, any other statutory body. Notice will be served to the applicants in case they have any representations. We will take that into consideration and then pass an order to either revise or reconsider the accounts. The accounts so revised or reconsidered shall be final. So the revised or recast accounts shall be considered to be final. All right, let us proceed. Maintenance of books, accounts, and other documents in electronic form. This is important because of the amendment. Now we can maintain books records in either physical form or electronic form. And in case you're maintaining the records in electronic form, then you need to consider the following. It is optional and permitted. See, small organizations, they still prefer to maintain the books in the physical form, but a bigger organization, yes, they would like to shift to the electronic medium. So it is optional, it is not yet compulsory. It is optional, it is permitted, but these records should remain accessible in India. It should be that the servers should be maintained in India, and the records which we are maintaining should be in a legible form. It should be in the same form that you're entering data. It should not be that you have entered data in a particular format, but the output that you get in is in a format or a language that is not comprehensible. This is an important point because it is an amendment. You can use the accounting software providing an audit trail, edit log of every change. You may use whatever accounting software that you're comfortable with, like Tally, ERP, or you may have your specialized software designed for your kind of business. But whatever electronic software that you're using must provide an audit trail. Audit trail means you should be able to trace the entry right from the beginning till the end. The person who has entered the details, in case it has been altered, then who is the person who has altered it, who has made the changes, who has authorized those changes. So we should be able to keep a step-by-step record of every entry that is made in that accounting system. So you should be able to trace it from the first step till the last step. In case there is any change, in case you are making any edit in any particular entry, then who has initiated the change, what is the change made, and who has authorized the change, all those details should be mentioned. It must remain in the original or similar format. So it is okay that if you enter data in a particular format and you get it in a tabular form or a graphic form, if the outcome is in a better format, then that is totally acceptable. Like you are entering basic data and you are getting it in a report format, that is fine, but it should be in a similar format. It must remain complete and unaltered. Yes. It should be displayed in legible form. Legible means a form which is understandable. It must be such that there is a proper system for storage, retrieval, display, printout of electronic records. So you must be able to maintain, retrieve the records, and you should be also able to take a printout of the record. Maintain periodic backup. Generally, backup is not maintained at the place where the data is kept. It is to be maintained at some other place. In organizations, normally on weekends, the IT department will take backup. So I remember when I was working, the IT department would ask us to keep the files in a common folder, and that folder would be backed up. Okay, so every weekend, they would take backup of the data. In case a question is asked in the exam, you are expected to write all these points. So highlight them and mark them as important for exam. Next, we have approval and signing of financial statements. So we know what is included in the definition of financial statement, what is considered as a financial statement. Now, who will sign and how will the financial statements be prepared? So let us first, I think we should discuss the financial statements should give a true and fair view. These are the keywords. So I'll highlight the keywords which will be present in your answer. They should give a true and fair view of the state of affairs of the company. They should comply with the accounting standards. Now, what is a true and fair view? I always say that true and fair view means जो लिखना चाहिए था वो लिखा है, जैसे लिखना चाहिए था वैसे लिखा है. It means whatever should be written is written. So all the material important information is provided. It is complete in all respects. And जैसा लिखना चाहिए था वैसा लिखा है. It means after following all the accounting standards. So it should give a true and fair view. It should comply with the accounting standards. It should be in a form as provided for different classes of company in Schedule 3. Schedule 3 will give you the format of preparing the profit and loss account and balance sheet. So it should be in that format only. These are few other points that you should keep in mind while preparing the financial statement. At each annual general meeting, okay, so this is something which will be considered in every annual general meeting. It's an ordinary business considering the financial statements. Yes, board's report. So at each AGM, the board of directors, they shall lay the financial statements for the financial year. If the company has subsidiary or associates, then yes, we will also prepare consolidated financial statements in the same form as the original statements are maintained. They will also be laid before the annual general meeting. In case the financial statements do not comply with the accounting standards, deviation along with reasons for the deviation and what is the financial impact of the deviation shall be disclosed. Now, one very important requirement is that the financial statements should comply with the accounting standards, and if they do not, then in the financial statements you have to mention the deviation, like we are not following this particular accounting standard and this is the financial impact, whether profit has increased or decreased due to that deviation. That should also be disclosed in the financial statement. So in case a question is asked on define financial statement and state the characteristics or features, then you can write whatever you see on the screen. See this. The definition will be mentioned along with section number. You need to write this note also, on which I have marked a star. Then financial statements shall, you will write that. Signing you need not include unless they specifically ask you to. Approval and signing of financial statements can be asked as a case-based question. Generally, it's asked as a case-based question. Section 134. Financial statements, including the consolidated financial statements, shall be first approved by the board and it shall be signed on behalf of the board by chairperson if the company has authorized the chairperson, if the board has authorized the chairperson, or if there is no chairperson, or if he is not authorized by the board, then by 2 directors, and out of this one will be a managing director in case the company has a managing director. So the consolidated financial statements as well as the standalone financial statements shall be signed by the chairperson, but only if he is authorized by the board, and if he is not so authorized, then it will be signed by 2 directors, out of which one will be managing director, if any. It will also be signed by the CEO, CFO, company secretary if they are appointed. In case of OPC, it shall be signed by 1 director, because yes, minimum we need only 1 director. So even if 1 director signs, it is allowed. Signed statements shall be submitted to the auditor. The auditor will submit his audit report as well as the financial statements to the members of the company for consideration in the annual general meeting. So you need to remember all this, and it is easily possible through the charts. Yes, I have written everything in step format, making it very easy for you to remember the points. Guys, I hope you're enjoying studying from the chart book. If you have not yet purchased the chart book, then do visit my website, theorymasterslearning.com. Copy of your chart book is waiting for you. All right, next let us discuss NFRA, important for short note, that is National Financial Reporting Authority. Because of the loopholes in the Companies Act, there were many frauds or scams that took place in the past, and most of them could be blamed on the auditor as well. There were cases wherein the auditor colluded with the management and they carried on those unethical activities. So after that, the government as well as ICAI became very stringent, and they introduced a special authority, that is the National Financial Reporting Authority. What is the power of NFRA? What are the duties, rights of NFRA, composition of NFRA? That is also something which can be asked in the exam. So aim was to enforce, to introduce and ensure that it is followed, monitor what? compliance of auditing and accounting standards. So these are the auditing and accounting standards that you need to follow while preparing the accounts, and the auditor will have to ensure that the accounting standards are properly complied with by the company. They need to follow the auditing standards while verifying, while checking the books of accounts. So NFRA, they only recommend these accounting standards. They are actually enforced by the central government. So the job of recommendation is done by NFRA. They have tried to make it stringent, slightly strict. Okay, they have increased the responsibility of an auditor. The functions of NFRA, it is, yeah, let us highlight the keywords. Okay, I'll change the ink. It is to make recommendations to the central government. So NFRA will only recommend. Finally, enforcement will be by the central government on formulation and laying down of accounting and auditing standards. So they only recommend. Then they will monitor and enforce the compliance with accounting and auditing standards. They will ensure that the auditing and accounting standards are followed by the auditing professional. They will also oversee the quality. These words should be present in your answer. They will oversee the quality. So how will you ensure that the quality of professionals is maintained? By ensuring that they attend training programs in case there is any amendment in the act. So we organize seminars or some training program wherein they can attend and update their knowledge. So even ICAI has introduced compulsory training hours for chartered accountants who are in practice. So every year they have to attend minimum 20 hours of training and updating their knowledge. So that is something, the quality of professional is something which is ensured by NFRA. So in case a question is asked on functions, there are 3 functions which you will mention. Powers of NFRA to investigate into the matters of professional or other misconduct committed by member or firm of chartered accountant. So apart from the ICAI, even NFRA can initiate action. They will exercise the same power as it is vested in the civil code. Civil code means that they can blame you for damages caused by your conduct as an auditor. So any authority person that has suffered damages because of your wrongful statement or report, yes, then NFRA will impose penalty on the individual. They will be forced to pay damages on the individual or the firm of auditors. They will impose penalty for proved professional and other misconducts. Even ICAI takes very strict action. They may suspend you. They may debar you from undertaking audits. They may penalize you. Sometimes they may even cancel your membership. So very strict actions are taken in case we find some kind of proved professional misconduct by chartered accountants. So that is NFRA. Next we have the board's report. See, the board's report, you can write down, it forms part of annual report. Okay, the board's report forms part of the annual report. Board's report is a way of communicating with the shareholders. See, shareholders give us money. Okay, they provide us their hard-earned money in the form of capital. So, and the board of directors manage that money. So at the end of the year, board of directors, they feel responsible to the shareholders. So they report as to how the company is managed, what is the profitability of the company, what is the dividend that they are recommending. Okay, the dividend is recommended, the final dividend is recommended by the board of directors through their board's report, and it will be declared by the shareholders in the annual general meeting. So this is a way of communicating the overall financial position, operation, the scope of business. So let me write it over here. They want to explain it through the board's report, the overall financial position, operation and business scope. Okay, so what is actually included in the board's report? What are the contents of the board report? It will contain web address, if any, where the annual return, as we had discussed in section 92, has been placed. The URL will be given you. If you're viewing the soft copy of the board report, just click on that and it will be directed. It will direct you to the annual report. Number of board meetings that were held in a year. So along with the date, the number of directors who had attended the meeting, directors responsibility report, Details of fraud reported by auditors. So in case frauds are reported by the auditors, the board of directors will give a reply as to what action have they taken against this fraud. So it means that the audit report will be submitted before the board's report. The date of the audit report will be before the date of the board's report. Comments by the board on remarks made by auditor. So whether the auditor has given a qualified report or an adverse report, or what are the comments given in the audit report, a reply to that will be given by the board of directors through their report. Again, it simplifies it, it signifies that the audit report will be submitted before the board's report. Company's policy on the director's appointment and the remuneration. What is the company's policy? How do they select? Is a nomination and remuneration committee in existence which suggests the name of the directors that can be persons who can be appointed as a director? So what is how do you appoint the director? What are the criteria? Like, do you see the qualification and the companies in which he's a director? So all that will be mentioned over there. Particulars of contracts of arrangement with related parties, material changes affecting the financial position. So in case there are certain material changes which are affecting the financial position, they may have taken place after the closing of the financials. So maybe they want to highlight it, they want to discuss that there are certain achievements which they want to bring it out to the shareholders. Conservation of energy, technology absorption, develop and foreign exchange, development, implementation of risk management, CSR policy and initiatives, where they are spending, what are the initiatives they are taking for CSR, what are the new businesses that they have launched, are the board meetings conducted on time, are there any other grievances, and how have they addressed. So it is a communication by the directors, they are communicating with the shareholders. Then we have the corporate governance report. Corporate governance means the manner in which a company is governed. Good governance implies that you have policies in place, you have more number of independent directors on your board, you have a code of ethics, you have a whistleblower policy. So there are certain things which make the employees comfortable, the shareholders comfortable. So how are you managing the company to the best of your ability? It aims to improve the company's image, efficiency, effectiveness, and social responsibility. So taking care of the employees, their welfare, their families, CSR initiatives, all these, and you're caring for the environment. These are good governance. Company's code of governance, board of directors, the composition will be discussed over here. Audit committee and other committees, their formation will be discussed, their members will be pointed out. Meetings held in the year, the annual general meeting, board of directors meeting, when was the other meetings held, the resolutions that were passed, and we will also mention the date of the meetings, people who had attended the board meeting. Materially significant related party transactions, non-compliance by the company, if any, date of book closure, it will be for declaration of dividend, dividend payment date, market price, plant location, and many other things. Okay, so this is something, these are the 10 points which you can remember from exam purpose. Otherwise there is a lot of other data also which is mentioned in the corporate governance report. Again, this also forms part of the annual report. Then we have corporate social responsibility. I'm not covering it over here because it is a very vast topic. There is a QR code. You can scan that. I will also leave a link of corporate social responsibility. I have covered the amendments as well as the explanation in that video. Please go and watch that video. It covers CSR extensively. Last, we have section 138, internal audit. Now, what is the work of an internal audit and how is it different from statutory audit? See, statutory auditor only goes through the books of financial statements to determine whether the financial statements show a true and fair view of the state of affairs of the company or not. They don't do an in-depth analysis of the systems. They don't do an in-depth analysis of any particular procedure. All that work is done by the internal auditor. Internal auditor and statutory auditor, they are two separate persons. Statutory audit cannot conduct internal audit of the same company. Now, internal auditor does an in-depth analysis of the systems. Basically, like when I had joined the corporate, I was working in the internal audit department only. You go deep into the system and you try to find out the loopholes. So you pick up any process in the company, try to understand the process, try to understand how the data moves in that process, what are the loopholes, what are the possible frauds that can take place, and you try to address those loopholes. You prepare a report, discuss it with the management, make changes, submit this report to the statutory auditor, and if he feels he can incorporate few points in his statutory report. Who can be appointed as internal auditor? So a chartered accountant, a cost accountant, or any other professional as decided by the board can be appointed as the internal auditor of the company. He may or may not be an employee. You can have your own internal audit department, and in apart from that, you can also get the internal audit conducted by an external internal auditor. Internal means someone who comes from outside, and your internal audit department is working continuously in the organization. So a chartered accountant, cost accountant may or may not be in practice, may or may not be employee of the company, can be an internal auditor. Listed companies have to compulsorily get internal audit done. Unlisted company will get the internal audit done only when their outstanding deposit is 25 crores or more during any time in the previous financial year, or the word is or. So these are not cumulative, these are alternative requirements. Paid up share capital is 50 crores or more. Outstanding loans from the banks, public financial institution exceeds 100 crore or more. Turnover exceeds 200 crore or more during the previous financial year. See, I've written it in sequence. So we start with 25 crores, double it, 50 crores, double that, 100 crores, double it, 200 crores. So these are the limits that you need to memorize. They will ask you whether they will give you a particular company, they will mention the paid up capital, turnover, and you have to decide whether the company needs to conduct an internal audit or not. In case of a private company, okay, in case of a private company, if the outstanding loans and borrowings from banks or the public financial institution exceeds 100 crore or more, turnover exceeds 200 crore or more, if either of these conditions are satisfied, the company has to get the internal audit done. So students, these are the requirements. You have to memorize this. Internal auditor, yes, as I discussed, he does an in-depth analysis of the systems, of the processes, tries to find out the loopholes. Who can be appointed as an internal auditor, that we have already discussed. And with this, we come to an end of the accounts of company. I have tried to cover all the important concepts over here. Next, we will discuss audit and auditors. I love the chapter. I love the charts that we have prepared. So let's study audit and auditors. Let us discuss a new unit, audit and auditors. This is my favorite unit because I love the charts that we have prepared for audit and auditors. Students, if you study these charts properly, you can actually convert them into an answer. These are not just pointers, these are actual sentences which you can comfortably write in the exam. Okay, so follow these charts properly. Everything is covered. You will realize that all the important sections are covered, and if I feel that at this point you need some extra information, I have included that also. Like, see over here, if the company is required to constitute an audit committee, not required. So if I feel that yes, at this stage you need to know something extra, I have included that also in our revision sessions. So beautiful charts prepared for appointment for audit and auditors, and I always tell my students that you should start revising in the reverse order. So cover payment of dividend, declaration and payment of dividend, accounts of company, audit and auditors first, and then you go to management and administration, followed by the earlier chapters. Now let us discuss audit and auditors, something which is common to audit as well as law, but even though it is a common topic, it is important for law. Many questions are asked. In fact, in every attempt you will get at least 1 or 2 questions from this chapter. So without wasting any time, let us jump into the audit and auditors chapter. Okay, yes, I have mentioned all the important section numbers over here. You need to remember these section numbers at least. Now, who can be appointed as an auditor of the company? So what is the qualification? What is the eligibility of auditor? If you wish to appoint an individual as an auditor of the company, then he should be a chartered accountant practicing in India. If you wish to appoint a firm, then in that firm, majority of the partners practicing in India must be chartered accountants. Now, the firm where I was doing my articleship, in that firm, there were many partners who were chartered accountants, but there were certain partners who were like, I remember one of them was a company secretary, one of them was a tax consultant. So it is not compulsory that in a firm you will have all partners who are chartered accountants. What law requires over here is that if you want to appoint a firm as an auditor, then majority of the partners who are practicing in India should be chartered accountants. Okay, so firm where majority partners practicing in India are chartered accountants. Majority means more than half of them. If you are appointing a firm, you can also appoint a limited liability partnership, LLP. You will notice that many of these audit firms, they have now converted themselves into LLP because of the features of LLP. Limited liability, yes, limited liability, separate legal entity. So because of these benefits, they have now converted in their existing partnership business into LLP. If you are appointing LLP as an auditor of the company, then in that case, only the partners who are chartered accountants can act and can sign the audit report. Okay, only those partners who are chartered accountants can act as an auditor, and only they can sign the audit report. So yes, you can appoint an individual chartered accountant in practice as the auditor of the company. You can appoint a firm. The majority of them are practicing in India, but they are chartered accountants. And if you are appointing a firm, then you can also appoint an LLP. But in that case, only the partners who are chartered accountants can act as an auditor and can sign the audit report. So this is eligibility and qualification. It is important for exam. It can be asked as a theory or maybe a case-based question. Now, if I want to appoint an auditor, the company has just been incorporated. What are the provisions for appointing first auditor covered under section 139 subsection 6? Yes, you need to remember this section number. Appointment of first auditor of the company. Now, the first auditor, see, these are steps which you need to follow. They are exact sentences which you can write in the exam. The board of directors, who will appoint? The board of directors shall appoint the first auditor within 30 days of registration of the company. So what are the keywords? Board of director will appoint the auditor within 30 days from the registration of the company. So when you try to memorize this, how will you memorize? You should see, when you see things in color, no, it is easy to remember. So board of directors shall within 30 days of registration appoint the first auditor. In case the board fails, they do not appoint the first auditor, it will inform the members regarding such failure, and then the members will appoint the auditor in the extraordinary general meeting within 90 days of receiving that information. So did you notice everything is properly given in steps and sentence form? So let us revise it. Board of directors will appoint the first auditor within 30 days of registration of the company. In case the board fails, they will inform the member, and the member, after receiving this information, will call extraordinary general meeting and appoint the auditor within 90 days of information. The auditor so appointed shall hold office till the conclusion of the first annual general meeting. So you need to write this common point also. So there are 4 points that is sufficient for a 4-mark question. You will also write the section number, which will definitely carry marks. This was appointment of the first auditor in case of a normal company. But what about appointment of first auditor in case of a government company or a company which is either owned, controlled directly or indirectly by central government, one or more state governments, partly by central, partly by state government? So these are the provisions which apply to appointment of first auditor, section 139 subsection 7. The Comptroller and Auditor General of India. So this is to be highlighted. If you have the chart book, please highlight along with me. The Comptroller and Auditor General of India will appoint the first auditor within 60 days of registration of the company. So CNAG will appoint the first auditor within 60 days. But what if the CNAG fails? Then they will inform the board, and the board shall appoint the auditor within the next 30 days. So as soon as they receive information, they will appoint the auditor within the next 30 days. If the board fails, then they will inform the company, who will call extraordinary general meeting and appoint the first auditor within 60 days of receiving the information. So let us revise. CNAG will appoint the auditor within 60 days of registration of the company. If CNAG fails, board will appoint within the next 30 days. And if the board fails, then they will inform the members, and the members will appoint the auditor within 60 days from date of information. Auditors so appointed will hold office till the conclusion of the next annual general first annual general meeting. Okay, so these are the 4 points which you will write in case of appointment of auditor in case of government company, or as I inform, a company which is either owned, controlled directly or indirectly by central government, one or more state governments, partly by central, partly by one or more state governments. All right, I want to appoint an auditor. That was appointment of first auditor. Now let us go through the provisions for appointment of subsequent auditor. Now, in case of other companies will include companies which are not government companies. Okay, so in case of other companies, this is discussed under section 139 subsection 1, and in case of government company, the provisions are given under section 139 subsection 5. In case of any other company, now you need to see whether audit committee is required to be constituted. If you are a company and you need to constitute an audit committee, Then what is the work of an audit committee? Audit committee is a liaison. Okay, they are like a middleman between the company and between the directors and the members. So the audit committee, they will suggest that these are the auditors, and we have selected this auditor. This is one name which they have zeroed in. So you can appoint this person as auditor of the company. So the audit committee, see how I have written the steps, they will recommend to the board of directors the auditor which can be appointed for that year. If the board agrees, everything is very happy. Okay, if the board agrees, they will recommend to the members in the annual general meeting, and the members will then appoint the auditor. It is one of the ordinary businesses, just an ordinary resolution required to appoint the auditor, and we also fix their remuneration. So what are the steps to be followed if you are required to constitute an audit committee? So the audit committee will recommend to the board. Board, if it is satisfied, they will recommend to the members. Members will then appoint. Now, what are the things that audit committee considers before recommending? So they will see whether the auditor that we are appointing has the necessary work experience, considering the type of industry, considering the type of company. So have they actually audited such type of companies in the past? What is their work experience? The team size, whether they will be able to handle the audit of such a big company. So experience, whether they are capable of, whether it is commensurate, the team size is commensurate, their experience is commensurate with the size and business of the company. So all that will be considered, and when found suitable, they will suggest the name to the board of directors. But if the board of directors does not agree, so they will refer back to the audit committee that please, we don't agree with this auditor, please suggest some other name. Now it may so happen that audit committee is suggesting some name, and the board of directors they are not happy, so they have referred it back to the audit committee, but the audit committee is adamant, no, we will stick to this person only. Then in that case, the board of directors will suggest one name, audit committee has suggested one name, we will place both before the members, and then they will decide what to do. Now, if the audit committee is like, okay, fine, if you're not happy with this, we'll change it, and then the board and audit committee agree, then in that case, it's a happy situation. They will recommend this, the name to the members, who will finally appoint the auditor in the annual general meeting and fix the remuneration. But what if audit committee is not required? Then in that case, the board will recommend to the members in the general meeting the name of auditor which can be appointed. Then the members will pass just an ordinary resolution to appoint auditor, and they will also fix their remuneration. So these are the procedure for appointment of auditor in case of other company. What about appointment of auditor in case of a government company? Very important provision, can be asked as a 2-mark question. The subsequent auditor will be appointed by the Comptroller and Auditor General of India for a financial year. It means, it says 1 year. Okay, so over here, means they are talking about a period of just 1 year, 1 financial year. If you want, I can write that also, financial year. So in this case, the auditor is appointed for just 1 financial year. In case of other companies, we will see the term of auditor. The term of auditor, he will hold office from the conclusion of that meeting in which he is appointed till the conclusion of the 6th meeting. So from the meeting that he is appointed, that is the first meeting of his office. So that is the first year. So first to second, second to third, third to fourth, fourth to fifth, fifth to sixth. This shows that in case of other companies, the auditor is appointed for a term of 5 years. After 5 years are over, you can either reappoint that auditor or you can appoint someone else in his place. Then 5 years are over, you will appoint the auditor for every 5 years. Only under certain cases, like we will study, only for certain companies, there is a provision of rotation of auditors that will apply. But if you are not covered by that section, then you can appoint an auditor for 5 years, you can again appoint him for 5 years, and so on. But in case of a government company, the auditor is appointed only for a financial year, and he will be appointed within 180 days from the commencement of the financial year. So the Comptroller and Auditor General of India shall, within 180 days from the commencement of the financial year, appoint the subsequent auditor, and this auditor will hold office till the conclusion of the annual general meeting. So whenever he is appointed, from that day till the conclusion of the annual general meeting. So only for a financial year, appointment will be within 180 days. Now, in case I wish to appoint an auditor, I will also have to consider the provisions of rotation of auditors. Now, this is applicable, you should know, only for listed companies or specified class of companies. Which companies are specified? That is given below. Okay, so these are the class of specified companies. I'm drawing an arrow so that you know we have discussed that also. So in case of listed company, you can appoint the auditor for term of 5 years. Like if you're appointing an individual, you will appoint him for one term of 5 years. After his term is over, he will be subject to a cooling period of 5 years. It means he cannot be appointed as an auditor of the same company for 5 years. After the cooling period is over, you can either reappoint him or you can appoint someone else. If you're appointing a firm, then in that case, you can appoint them for 2 terms of 5 years each. So we will not appoint them together for 10 years. No. We will appoint them for one term of 5 years. Then after that, it is open to the company whether they want to appoint him for another term of 5 years. Then the company can do so. In case the company wishes, no, we don't want to appoint him, we'll appoint someone else, the company is free to appoint someone else. So let's say that I am a company, I have appointed a firm for 5 years. After 5 years are over, I can either reappoint that person or I can appoint someone else. After those 10 years are over, then there will be a cooling period of 5 years, and that firm cannot be reappointed as an auditor of that company. They can be appointed as auditor of any other company, but not that same company. After that cooling period is over, now the company, if you want to reappoint them, you can do so, or you can appoint someone else. There are certain specified companies to which this rotation of auditor applies. So it applies to all listed companies as well as other specified companies. Let us go through those specified companies. These specified companies exclude OPC and small companies. All right. So which are those specified class of companies to which this rotation applies? So we will not consider OPC and small company, but we will consider all unlisted public companies having paid up capital of 10 crores or more. So if you are an unlisted public company, rotation will ideally not apply to you because it applies only to listed company. But if your paid up share capital is 10 crores or more, then the rotation part applies. For if you are a private company, okay, if you are a private company having paid up capital of 50 crores or more, then yes, the rotation part will apply. All the companies having paid up capital below the threshold limit, like you are not a listed company, you are not satisfying any of these above criteria, but you have public borrowings from the financial institutions, banks, or other public deposits of 50 crores or more, then rotation of auditors will apply. Okay, so this part is extremely important for exam. You need to know the companies to which, these specified class of companies to which the rotation of auditor applies. So let us go through it once again. All unlisted public companies having paid up capital of 10 crores or more. It doesn't apply to a private company, but if you are a private company having paid up capital of 50 crores or more, or maybe you don't fit into any of these above criteria, but you have public borrowings. I was just checking whether bullet points are mentioned or not, because I have written bullet points in the third point. So if you have public borrowings from banks, financial institutions, or 50 crores or more, then yes, rotation applies. If I'm not a listed company, if I am not a specified class of companies, then I can appoint auditor for 5 years, again 5 years, again 5 years, again 5 years. All right. Expected exam question. Yes, this is a concept on which I feel they can ask you an exam question. If suppose Messrs ABC and company, they are chartered accountants. Okay, ABC and company chartered accountants. They are appointed as auditor of the company. Now they are 5 years term, 5 years term. There's 2 terms they are over. Now we want to appoint Messrs APQ and company chartered accountants as the auditor of the company. In this case, Mr. A is a common partner. Okay, Mr. A is a common partner. Can I appoint A, P, and Q as auditor of the company during that cooling period? Answer is no. We cannot appoint we cannot appoint A, P, and Q company chartered accountants as the auditor of the company because there is one common partner. So what we want to say is that in case of outgoing firm and incoming firm, if there is one common partner, then you cannot appoint that person in the cooling period. Now, if the cooling period is over, then company, it is up to you whether you want to appoint Messrs A, B, C and company or Messrs A, P, Q and company. It is up to you whether you want which firm you want to appoint as auditor. Okay. Then we have provisions relating to reappointment of retiring auditor. Now, an auditor retires automatically after 5 years, after his term is over. you can reappoint him, no problem. If you are not covered by the rotation part, you can reappoint that person, provided that he is not disqualified for reappointment. When will he be disqualified? I have discussed that separately later. So if he is not disqualified, or if he has not given a notice in writing of his unwillingness to be reappointed, he should not say that no, I don't want to be reappointed, and a special resolution has not been passed at the meeting appointing some other auditor or providing expressly that he shall not be appointed. They both actually mean the same. Let us discuss it now. He should not be disqualified from being appointed. All right, he should not be subject to any of those disqualifications. He should not give in writing that, see, please, I don't want to be reappointed. Then in that case, we can't reappoint him. A special resolution has been passed in the general meeting asking the company to appoint someone else instead of the current auditor, or you are saying appoint any other person except this current firm or current auditor. So indirectly you are asking the company to appoint someone else instead of the current auditor. In that case, the current auditor cannot be, or the retiring auditor cannot be reappointed. So section 139 subsection 9. And now what is section 139 subsection 10? Where at any AGM no auditor is appointed or reappointed, then the existing auditor will be considered. He will continue to be auditor of the company. So if no auditor is appointed, then the existing auditor will continue auditor of the company. That is discussed under section 139 subsection 10. This is very important for not only theory but also case-based question. The ones which I've highlighted in red are frequently asked exam questions. If you are a statutory auditor of the company, then you cannot provide accounting and bookkeeping services. It is so logical. You cannot prepare the accounts as well as audit it. You cannot conduct internal audit. Now, there were students who were asking me, ma'am, I cannot become an internal auditor of any company. No, that's not the case. If I am a statutory auditor of, let's say, company X, then I cannot be internal auditor of company X. I can be internal auditor of any other company. But you cannot be both statutory as well as internal auditor of the same company. You cannot design and implement any financial information system, because you cannot design the system and then come to audit it. You will never find out faults in the system that you have designed. You cannot provide actuarial services, investment advisory services, investment banking services, rendering outsourced financial services. Like, say, for example, you have the company has outsourced the salary computation to you, or maybe you have any knowledge portal. Okay, it's a KPO that you are providing some certain kind of knowledge to the company, financial advice to the company. You are computing the salary or taxation of the employees, you're filing their returns. So there you are providing some kind of outsourced financial services to the company. You are not an independent person. You are not independent enough to be appointed as auditor of the company. Management services, any other kind of service as may be prescribed. So if you are providing these kind of services, you cannot be an auditor. And you can also say it in the other way. If you are an auditor of the company, then you cannot provide these services. Are you getting me? So if you are an auditor, you cannot provide these services. And if you are providing these services, you cannot be appointed as an auditor. Section 144, section number is important for exam. As I already informed, it can be asked as a theory question or a case-based question. Next, let us discuss casual vacancy. Section 139 subsection 8. The term casual vacancy is not defined in law. We just have a general meaning of the word casual vacancy. Now, casual vacancy is a vacancy which is caused due to death, disqualification, which is discussed here. Where is it? Here. Yes. So casual vacancy is caused due to death, disqualification, resignation of the auditor after, yes, that is important for us, after accepting the valid appointment. So I was appointed as auditor of the company. Later, I attracted any one of these disqualifications. I create a casual vacancy. That vacancy will be filled by the board. Yes. Okay. So casual vacancy is due to death, disqualification, or resignation of the auditor. Now, if the casual vacancy is created in case the auditor is appointed by comptroller and auditor general. So you are a company whose accounts are subject to audit by the auditor appointed by CNAG. This will happen in case of government company or a company which is either owned, controlled directly or indirectly by central government, one or more state governments, or partly by central and partly by state government. If you are an auditor appointed by CNAG, then the casual vacancy will be filled by CAG within 30 days of creation. And if the CAG does not fill, then it will be filled by the board within 30 days. Okay, the board will fill it within 30 days. If you are any other company, then it will be filled by the board within 30 days of creation. But if the resignation is caused due to, if the vacancy is caused due to resignation, I seriously want to know why the auditor has resigned. Okay, so in case of resignation by the auditor, yes, it will be filled by the board, it will be appointed by the board, but it shall be approved by the company at the general meeting convened within 3 months of recommendation by the board. This is important for exam students. Now, in case a casual vacancy is created by resignation, we would like to know the reason for resignation by the auditor. Why, after accepting a valid appointment, why are you resigning? What is the reason? So in that case, although the appointment filling the casual vacancy will be by the board, but that will have to be approved by the company in the general meeting, which will be convened. The meeting will be convened, it will be called within 3 months of recommendation by the board. Now we want to know why did the auditor resign and who are you appointing in his place? So you also need a confirmation by the company in the general meeting. Auditor so appointed shall hold office till the conclusion of the next annual general meeting. All right. Now, in case the auditor is resigning, it's an extremely important situation for me. I would really like to know why you are resigning. So, auditor, please file form ADT3. Okay. In case of other companies, and the provisions are separate in case of government companies. So in case of other company, auditor, please file ADT3 within 30 days of resignation. File it with the company and registrar, giving us the reasons for resignation. You tell me up till what date have you completed the audit? Have you paid the audit fees or not? What are your observations? Was there any qualification? Why are you resigning? We would like to know the reasons. So in this case, the auditor will file form ADT3. It is to be filed with the registrar and the company within 30 days of resignation. But if you are a government company, then yes, you will file form ADT3 within 30 days of resignation. This will remain the same, and it will be filed with the company, registrar, comptroller, and auditor general. This is the only thing which they have added, and that also because it is a government company. Disqualification. Okay, before that, let us go through the removal of auditor before expiry of the term. Now, in the previous case, auditor was resigning. Here, you are removing the auditor. Before, the word before is important. You are removing the auditor before the expiry of his term. Section 140, subsection 1. Now, in order to remove an auditor, you will have to call a board meeting. So, let me highlight those points for you. You will call a board meeting, which will be held to decide about the removal of the auditor. Maybe the auditor is not standing up to your expectation. Maybe the auditor, he had a team, but many of them left. So now it will not be possible for you to get the audit completed on time. So why are you removing an auditor? Or maybe the auditor was colluding with certain employees and committing some fraud. What is the reason? So board meeting will be held to decide about removal and then filing authorizing the filing of filing of application to central government. So you cannot just remove an auditor on your own. You have to obtain the approval of the central government. So the board will first convene a board meeting. There they will decide how to remove and why we should remove the auditor. They will file the application with central government citing the reasons for removal. Application to the central government will be made in form ADT2 within 30 days of the board meeting. Central government will give its approval. Company to hold the general meeting within 60 days of approval of the central government. So what is the sequence? First, call the board meeting, apply to the central government. Central government will give its approval, and within 60 days of approval, you will hold a general meeting with your members. pass a special resolution at the general meeting, give reasonable opportunity of being heard to the auditor. Here the auditor will give representation. We will circulate that representation along with notice. Here in the representation, he will mention reasons as to why he should not be removed. We will circulate that representation along with the notice. But if it is not possible for the company to circulate it along, maybe it was received late, then they will read it out. Auditor will require the company to read out his representation in the meeting. So step 1 is we called a board meeting. We decided to remove the auditor, and we also filed an application with central government. Central government application was filed in form ADT2 within 30 days of board meeting. Central government gave their approval. We immediately called the general meeting within 60 days of approval. Pass a special resolution in the general meeting removing the auditor, but you please give him an opportunity of speaking as to why he should not be removed. Disqualification of auditor. Now, under these circumstances, you cannot appoint that person or a firm as auditor of your company. This disqualification may be at the time of appointment, or it may be attracted after appointment. Okay, it is possible that the person is disqualified, therefore we did not appoint him. Or it is possible that the person was appointed and then later he contracted the disqualification. You cannot appoint a body corporate except LLP as the auditor, because it's something which requires a personal touch. You need someone with mind and conscience. Body corporate doesn't have a mind or conscience. You cannot appoint a body corporate, although it is a person in the eyes of law, but they cannot come and audit. But a firm, yes, firm is not separate and distinct from the members, from the partners who have formed it. So therefore, we can hold the partners liable. But yes, now we are allowing LLP because of the best features that it offers: flexibility of partnership and limited liability of a company. You cannot appoint an officer or employee of the company. See, officer or employee receives remuneration from the company. They will not be independent and unbiased. They will never say against the company. They will never go against the person who's paying them salary. So they are not unbiased, they are biased. We cannot appoint them as an auditor. Any partner or employee of the officer or employee of the company. Now let's say Mr. E is an employee of the company. He is also a partner in a firm. Okay, he's a partner in a firm. That partner cannot be appointed as auditor of the company. Okay, partner of that firm, any partner of that firm cannot be appointed as auditor of the company, because Mr. E can easily influence them. Person who himself or his relative or a partner is holding any security or interest in the company. Interest word is used when there is no share capital. You are holding either in the company or holding or subsidiary or associate. If you are holding shares in the company, if you are holding securities either in the company, holding, associate, subsidiary, you cannot be appointed as auditor of the company. But I think this is unfair, no? You or your relative or your partner, you cannot hold security. Why punish the relative? So law has given some relaxation. Your relative of the auditor can hold securities in the company of face value rupees 1 lakh up to rupees 1 lakh. So yes, your relative can hold securities in the company up to face value rupees 1 lakh. Now in this case, what if at the time of appointment, my relative held only securities worth 60,000 rupees? So I was appointed as an auditor. Later on, he purchased more securities and now his holding is 1,20,000. The auditor will have to remedy this defect in 60 days. Okay, I will have to remedy this. I'll have to tell him that, relative, see, because of you, I will be disqualified. Please sell these securities, transfer them. Remedy this defect in 60 days, else you will be disqualified from being appointed as an auditor of the company, and that will create a casual vacancy. Theory, case-based question are generally asked on all these provisions. So disqualification is very important for exam. Many a times I have observed that they have asked a case-based question on this, and this is important because it has been frequently asked. Person who himself or his relative is indebted to the company or subsidiary or associate, subsidiary of the holding in excess of rupees 5 lakh. So let's say that Mr. X owes 7 lakh rupees to the company. He cannot be appointed as the auditor of the company. He owes 7 lakhs to the associate. He cannot be appointed as the auditor of the company. And fellow subsidiary is also included over here. Any person who has given guarantee or security in connection with the indebtedness of any third person to the company or subsidiary or associate or holding or subsidiary of such holding in excess of rupees 1 lakh. So can I say in simple words, if you are a surety, you have given guarantee of more than rupees 1 lakh, you cannot be appointed as the auditor of the company. So let's say, for example, that H has given some loan to S. I'll use some different letter. H has given loan to P. S acts as a surety. H, don't worry, P will pay the money. If he doesn't pay, then I will pay. You're acting as a surety. You cannot be appointed as auditor of the company to whom you have given a guarantee. So he cannot be appointed as an auditor of H. So any person who has given guarantee in connection with the indebtedness of a third person to the company, so you cannot be appointed as auditor of the company. Now, what is the logic? See, you will never be unbiased because you have given guarantee for some other person. If that person defaults, I don't think that you will ever want to disclose that to the holding company. You will always know it is going proper. There is some kind of financial interest, so you cannot be appointed as an auditor. A person or a firm who, whether directly or indirectly, has business relation with a company or subsidiary, holding, or associate. So you have sold goods to the company, you have some kind of financial transaction, you have given loan to the company, you cannot be appointed as auditor. Person whose relative is a director or employment of the company as director or KMP. Now let's say, for example, I'm just highlighting this separately. Person whose relative is a director, maybe a nominee director, an executive director, he's in employment as a whole-time director, or maybe a KMP, you cannot be appointed as auditor. So let's say, for example, that Mr. X and his relative Mrs. X, wife. Okay, wife is relative. So wife is the director of the company. So Mr. X cannot be appointed as auditor. Wife is a whole-time director of the company. X cannot be appointed as auditor. Wife is a KMP. X cannot be appointed as auditor. Wife is just a store manager. X can be appointed as an auditor because a storekeeper. Okay, I'll use the word keeper because you will say my manager is also included in the definition of KMP. Okay, she's a storekeeper or she's just a regular employee. Then yes, Mr. X can be appointed as auditor of the company. We don't see any problem in that. But you know what, students, from this, I remember one incident. A colleague of mine, okay, when I was doing my articleship, my friend, we were auditing a company and her father was at a very good position in the company. My friend was not given that audit. She was not a part of my team. Why? She was a part of the team, but for that particular audit, she was not included just because her father was an employee. So she was sent on some other audit. Then we again met on some third audit. But I just remembered that her father was an employee, and yes, she was a part of the audit team, but for that particular audit, she was not a part of the team. So yes, these things are very practical, they happen. Person who is in full-time employment elsewhere, you are working 9 to 6 in a bank, how will you audit my company? Okay, you are working in a corporate 9 to 9, how will you find the time to audit my company? You are not qualified. Person who is an auditor in more than 20 companies, see, I am not superman or superwoman. I cannot audit 50 companies, 100 companies. There is a maximum limit of audits that you can undertake, but in that 20 maximum limit, it will not include OPC, small company, dormant company, private companies having paid up capital less than 100 crores. So even if your number exceeds because of these small companies, then I think it's fine. Now, this limit applies to every person. So if I have a firm having 3 partners, A, B, and C. So Mr. A can hold maximum 20, B 20, and C 20. So the firm can hold maximum 60 audits. Okay. Now, Mr. A is also an auditor in some. He's also holding, he's also a partner in some other firm, and there he is holding 11 audits. So in this firm now total 20, right? So in this firm he can hold only 9 audits. So if you are a partner in different firms, aggregate 20 is the maximum audits that you can undertake. So in firm 1, firm 2, we will keep adding. Now his limit is reached. he cannot accept any more audits. But yes, that number of 20 will not include OPC, small company, dormant, and companies which are private and they hold less than 100 crores paid up capital. Person who is convicted by a court of an offense involving fraud and a period of 10 years has not elapsed from the date of such conviction. It means the cooling period of 10 years has not elapsed. So if you may have been convicted of some fraud, there are many occasions wherein the auditors collude with the employees, with the management. Yes, and if you have been charged for fraud, 10 years have not elapsed, so that cooling period has not elapsed, you cannot be appointed as auditor of the company. Person who either directly or indirectly renders service as provided under section 144, you are disqualified. So if you are providing actuarial services, you cannot be the auditor. If you are providing financial services, you cannot be an auditor. And if you are an auditor, you cannot provide those services. If we attract the above disqualifications, it shall be deemed to be casual vacancy. Okay. Very important. Yes, all the important provisions are only covered in chart book. You may be feeling ma'am is repeating this important thing many times. That's because I have included all the important concepts for last minute revision in this chart book. Now, in case a company and an officer of the company commits contravention of section 139 to 146, I'll just highlight it, 139 to 146. If the company and its officer has committed any contravention of these sections, then in case of company, it will be subject to fine ranging from 25,000 to 5 lakhs. Every officer in default will be subject to fine ranging from 10,000 to rupees 1 lakh. So minimum and maximum. How about auditor? If the auditor has contravened any of the sections like 139, 144 and 145. So if you have contravened section 139, 144 or 145, if the default is not willful, okay, you have not done it willfully, जानबूझ के नहीं किया है, then fine will be 25,000 minimum. Maximum, it will be 5 lakhs or 4 times the remuneration, whichever is less. So for the maximum limit, we will consider 5 lakh rupees, calculate 4 times the remuneration, whichever is less, that is the maximum amount of penalty. So let's say 4 times the remuneration comes to 4 lakh rupees. So 5 lakhs and 4 lakhs, whichever is less, that is the maximum. If the default is willful, then yes, you will be subject to imprisonment also, which may extend to 1 year. Fine, minimum 50,000, which may extend to 25 lakhs or 8 times the remuneration, whichever is less. So you will calculate 8 times the remuneration, compare it with 25 lakhs, whichever is less, that will be the maximum penalty. Minimum is 50,000, maximum you can calculate. Auditor will also be liable to refund the remuneration. See, you have performed that act willfully, you will have to refund the remuneration, pay for damages, because people rely on your statement, people rely on your reports, they invest in the company on the basis of the audit report. If because of your false statements, company, statutory body, members, creditors, they have suffered loss, then you will have to compensate. So pay the damages to statutory bodies, authorities, members, creditors for any loss arising due to incorrect statement in the audit report. Students, you will have to by heart this. There is no other way out. That is why I have given it to you in proper tabular chart format, so that you know what is the minimum and what is the maximum penalty, what is the penalty to the company, officers and auditor. So please by heart this. A separate question can be asked, or they can combine 2 questions and ask you to specifically mention the punishment for contravention. Okay, so with this, students, we come to an end. Yes, we have come to an end of Audit and Auditors. We covered the entire chapter in just 2 pages. Visit my website theorymasterslearning.com for this chart book. We also provide lectures, test series and books for CA Foundation and CA Inter Law.